here's a comment from somebody that's just getting into trading. That makes me think, what kind of video could I make that would really help somebody that was just starting out? What type of tips and strategies would have helped me get closer to success? Oh. Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. I want to take a step back and think about what it's like to start trading options. I'm going to put myself in the shoes of my beginner self and share everything that I wish I knew. And this is all going to be aimed at getting you closer to your trading goals as we move into January of 2025. Okay, so if you're ready to jump into the world of options trading with a solid start, then let's get into it. Right off the bat, the number one thing that I would focus on as an option trading beginner going into 2025 is, of course, getting familiar with the key terms and concepts. I want you to think about options like learning a new language. You wouldn't go out of the country without at least knowing some basic phrases, right? Hello, help. Anyways, the world of trading options has its own language, and knowing that is going to be critical for your success. So here's what I want to do for this video. I have a list. These are going to be some of the most important terms that you're going to see starting out with options, and some of them may be a little bit more advanced, but it doesn't hurt to at least be aware of them. And so with this, you can even start right now by setting a goal for yourself. So you can say, okay, I'm going to research 5 of these a day, okay, or even 1, 2, 5, whatever works, but do it at your pace. Look for examples and really understand how they work in the real world trading scenarios. So now what I want to do is I'm going to have a really quick breakdown of what we're actually doing here when we're trading options. Think about the stock market like a huge marketplace where people are buying and selling shares of businesses. Okay, so the prices of those shares are going to go up and down based on how many people want to buy or sell them. So it's all about supply and demand. If there's more demand, people bidding, then that's going to increase the price. But on the opposite, if there's a higher supply, more sellers, then that's going to decrease the price so that we can get some of these buyers in here. The price is also going to be influenced by things like how well the company is doing, what's going on in the economy at that time, and even big news like elections. Now, as far as options, with options trading, you're going to be dealing with contracts, and these contracts give you the right to buy shares of that stock at a specific price, but you're not forced to. All right, so this specific price, that's going to be your strike price, and you're expected to make your move before that contract expires. In my experience, it's all about playing with the contract values. Essentially, I've been profiting off the value change of buying and selling the actual contract of those options without buying the shares of the stock. And so that's one of the things that I hear a lot when people talk about options, or just the definition is, you have the right but not the obligation, and nobody really ever talks about what that obligation is. That's something that I wish I would have known going into options. You have the right but not the obligation. When it says that you have the right, that's when you're buying to open an option. So basically you are anticipating that the value of the contract is going to go up so that you can sell it later at a higher price. If it doesn't pan out, then you can just lose the full premium that you paid and not the shares because you didn't buy them. Now on the opposite, the obligation, here's where we coming to the obligation part. When we sell to open, on the other hand, that's different. So you can actually outright sell first, and that's called writing an option. Here's where that's going to go into play. I have right here an SPY call option that expires next week. And so you see here how it says buy and sell. Okay, now I'm looking to enter this position at this time. When you buy to enter an option, then basically you're anticipating the value of that contract is going to go up so that you can sell it later at a higher price. But if things don't pan out your way, then all you lose is the premium. There's a maximum loss that you can have with, just trading calls and puts with the buy to open. All right, so all you would lose is the premium, but not the value of the shares, because we never exercised the contract. Now on the opposite, if we were to sell to open, That's when you're basically saying to somebody else, okay, if you do choose to exercise this, then I'll give you the 100 shares. And this is called writing an option. And it means that you're on the hook to give those shares to somebody else if they decide to exercise the option. And this is called dealing with naked calls and puts, where you're promising to sell the shares that you don't actually own. So if the buyer calls you out on it, then you have to scramble together and get the shares for them. How much is SPY right now? 591. Ooh, 591 times 100. So that's how much you would owe somebody, $59,000 for the most part. So that's why we don't really go around doing those type of positions. For beginners, we're gonna stick to the basics and just build up from there. I wanna cut through all of the noise and highlight that not being obligated doesn't mean that there's no risk, especially with selling options. In this video, I really don't feel like we need to discuss what a call option is, what a put option is, the strike price, none of that. Okay, the only thing that I really want to highlight, which is something that I really wish that I knew starting out, is more so about the break-even point. Right now, I actually want to pull up a profit and loss diagram. This is a call option strategy. Every single option strategy, they have their own profit and loss diagram. Basically, it just shows you the max profits, max loss, break-even points, and the strike prices. The first thing that I want you to remember when you're looking at this image is that this is theoretically on the expiration date. Okay, so this isn't an image of what's going on throughout the process of this option being open from this date to that date. That's not what this is. This is on the last day that the option is open. Now, when I'm doing short-term trades for options, I never really want to hold that position to the expiration date. Even if I'm day trading, I'm not going to enter a position that expires on that date, okay, because it's just going to continue to lose value even during that day. Theta does affect that contract, even if the actual stock is performing well. One thing I really wish I knew when I was starting out with options would be the fact that the break-even point is literally just saying, okay, this is the price where the stock needs to be by the expiration time for you to have not lost that full premium. Okay, so if you are looking at this example I have right here, we have our maximum loss is around 7. Wait, hold on. Unlimited profits. So wanting to sell it, let's just enter. Okay, so we're looking at an SPY. 529 is the strike price. It expires December 27th. Now, right now, what is SPY at right now? Okay, right now SPY is at 591.15. We're already right below the strike price, but the break-even price is 596. Okay, so that just means by the expiration date, we wouldn't have lost that full premium, basically being eaten up by the theta. So even though the strike price is 592, if we were to hold this position until the day of expiration, the stock would need to move up to 596 for us to have not lost that $400 that we spent for the premium. That's all that means. And so when you even look at the break-even point, you can see that this is literally going to be the point right before you start moving into the loss territory, and the loss territory on the day of expiration. So honestly, that's all that break-even means. I know a lot of people feel like they have to get to the break-even before they see profits, but that's not true. You would see profit if you buy it at a certain price and then it increases in value. It doesn't have to, reach the break-even point. As long as that stock is moving in value, then your option contract, depending on the Greeks, it's going to be moving. Now, after we talked about that, literally what I want to move to next is what causes option prices to change. That's another thing that I wish that I knew going into options. There's a lot more than just the price of a stock that can cause your option contract to gain or lose value. We actually just talked about one of them. That's time. How far or near it is to the expiration date. Every single day that you keep a contract open, it loses value. And we're going to get into that in a second. What causes option prices to change? The first thing I want to talk about is intrinsic value. Intrinsic value is basically how much money you would get if you were to exercise that option contract right now. If the stock price price for a call option is higher than the strike price, then essentially you're in profit. So the intrinsic value is positive because you could buy the stocks cheaper right now than they're selling for. It's going to be the opposite for a put option. If the stock price is lower than what the strike price is, then selling it is going to give you an immediate profit. So how does that affect the actual option price? As the stock price is moving closer or further away from the strike price, then the intrinsic value is going to change, and that's going to directly impact the option's price. More intrinsic value genuinely means that the option is going to cost more because it's more valuable to the person that's holding it. Now, the next thing is time value. This is the price of hope, basically, and this is what you're paying extra for, betting that the stock is going to move in your favor before the expiration date. So the more time that you have, the more you're usually going to pay for that option contract because there's a higher chance of that stock moving the way that you're anticipating it. And as you start to move closer to the option's expiration date, then that value of hope, it starts to fade away, okay? And you can literally see that on the chart, how that hope value drops, and it drops extremely quickly. The last 30 days starts to get a little crazy, all right? And this drip is why options can lose their value over time, even if the stock isn't moving that much. Another thing is volatility. And here's the thing about volatility. That's basically how dramatic the stock is expected to move. And so when the market expects a stock to, move a lot, then it's going to have higher volatility. And so that's going to cause the price of the option contract to move up. So why does a higher volatility cause the option contract to cost more? Because the odds of the stock hitting our jackpot or, our limit or moving in the money is going to increase. So I just want you to think about that as, think about it like a thrill factor. If you have more thrills, aka volatility, then that means that you're more willing to pay at the door. Premium. That's just like going to the club. If your favorite artist is hosting, you're probably willing to pay a little bit more because they may perform that night. They may pull somebody on stage. Who knows what, you may go home with them. I don't know. Okay. But yeah, so that's where the premium comes in as far as the volatility. So if the stock starts to calm down and becomes more predictable, then that thrill value goes down, and so does the cost of the option. And actually, these last two that we talked about, time value and the volatility, those are pretty much going to be the heartbeat of your option prices. So it's constantly fluctuating and it's responding to what's going on in the market and, how close we're getting to the expiration. Another thing that you want to focus on with options is the open interest and the volume. And as far as the open interest goes for the options, that just basically means that these are contracts that were held or they weren't closed, overnight. And so it's kind of like saying, okay, well, there's more people that are actually interested in keeping this position open. So I'm guessing that's where the term open interest comes. That's fine. So you have volume on the stock and you have volume on the option contract. They both need to be significant and substantial. So I'd say for the stock, at least 1 to 2 million. And for the option contract, I would say at least 1,000 for the volume. Usually I don't want this to be below 1,000, and that just means that the actual option contract is liquid. Now the Greeks, these are going to be a different beast compared to the core things that we talked about. The option Greeks are going to be about the what ifs. Okay, so delta is going to give you an idea of how much the option price might move when the stock moves $1. So it kind of gives you a sense of the value direction. Gamma is going to talk about acceleration. So that's how fast the delta can change in value as the stock price moves, because as the stock price gets higher, the delta will increase as well. And so you're just getting more money all along the ways. And so that's just going to add a little bit more of the prediction factor. Theta is going to measure the time decay, and that's how much value that the option contract is going to lose as it gets closer to the expiration date. And it's different from, but related to time value. Vega is going to tell you how sensitive the option price is going to be to the stock's volatility. It shows the risk of fluctuation. So as the volatility changes, the Vega is going to show you how, much the option contract is going to gain or lose. And Rho is about interest rates. That's not something that may be immediately impactful for most traders, but it's still something that's important. Something really important about deltas. Higher delta is usually what you're going to be looking for. Since it sticks close to what the stock is doing, don't assume that higher is always the end all be all. So don't don't just feel like you always have to buy the option with the highest delta, okay? Because that's usually going to have a higher premium. I was just having a conversation yesterday on Zoom about buying options with someone, and he was pumped about, you know, getting into in the money option contract, and that's amazing. But he was, he was paying $500 and $600 just to get one contract for a delta of 0.5. And so what you could do is you could go for an option contract that has a lower premium and that also has a lower delta, and then just stack up on those, buy more. And so that delta value for all of these would essentially be the same value as what you were going to buy for the more expensive option contract. And then there's, in some cases, if it's a lot cheaper, you can just buy more to where it just knocks it out the water, and it's a dollar for dollar move. And so when you do it this way, you're kind of creating your own high delta without breaking the bank, because you're going to see that it costs a lot less. And let me just show an example of that. Hey, just look here. I want you to look here. I'm going to just have it on the call side. We're looking at calls here. We have our strike price on this side. The last ask and bid, that's basically, it's just what it's going for right now in the auction. Okay, this is basically an option. So take a peek at this delta right here on the 591 strike price. The delta is 0.50. That's great, but the option contract is $450 for one. Look a little bit further down here at the 597 or the 596 strike price. Those option contracts have a premium around 150. One of them is almost 200. But you can buy two of these, like you can buy two of the 596 strike price. That would be probably around $400. So it would be $50 cheaper, and you would actually have a 60 for a 0.6 for the delta value by having two of those contracts. So that's just a way that you can stack that up. Now, I don't know if that's probably not the best example because it's still a little bit expensive, but that's just the way that I've been trading, and I'm able to see profits with less of an investment. So when you start to piece it together like that, like 5 of those, bam, your overall delta effect could hustle past the pricier individual contract that you had before. But I do want to say that even though, you have a collectively high delta, your overall position is still going to be more sensitive to time decay and changes in implied volatility. Plus, that stock does still need to move a good amount before you see those out of the money options become extremely profitable. The last thing that I'm just going to say about the Greeks, and I'm going to be done with it. If you're not feeling comfortable with the option Greeks, then trading options is going to feel like trying to hit a target blindfolded, because these are the secret sauce to strategizing your next move and even selecting your contracts. With that, we just walked through the option Greeks, which is frankly like unlocking the cheat code in trading options. But knowing that alone isn't going to be enough to hit the ground running. You got to have a solid broker that isn't just going to eat into your profits with crazy fees, and something that also gives you a feel of trading. This part is going to be choosing your platform. What's going to be crucial here? First off, you want a platform that isn't just going to make you throw your phone against the wall out of frustration. You need something that's easy to use. You want a platform where there's not a lot of difficulty navigating through things like placing your trades, checking on them without having to, go to 100 different tabs. And the next thing, you don't want a platform that is just all looks and no brain. So you also want some advanced charting tools. If you're getting into the world of trading, these tools aren't just nice, but they're actually necessary to make these educated, informed decisions. Another thing that's critical to me, paper trading for options. This is going to be your training wheels, people. Okay, so if your platform doesn't have paper trading, then that's like learning to drive a car without tires. Okay, it's probably going to be a little bit bumpy. So platforms that I would tell my friends to use, Webull, yes, okay, they have pretty much everything that I need as far as my trade. Now I'll leave it at that, but that's a really great platform. They have amazing paper trading feature for options and stocks. They have tools like scanners and screeners to help you find stocks and options that fit certain criterias. They have an amazing education section, so it's great. It is a little bit of a learning curve, but I promise you it's worth the climb. Robinhood, I just want to say these are platforms that I'm familiar with, so this is just my opinion. But Robinhood, it's easy, it's straightforward, and that's very helpful when you're starting out. You don't need anything to overwhelm you, okay? But with Robinhood, I just want you you to keep in mind. It's a little bit light on the tool side, and that's all I'm gonna say. Now, if you really want to get serious, my choice is Thinkorswim. They roll out the red carpet as far as tools and resources go, so it's pretty hard to beat. They have everything that I talked about before and then some, but the learning curve, okay, it's a head scratcher, but thankfully there are tutorials online. They have a great help section, and you can call them and ask them questions. They do respond. It's hard to beat that. If I had to do it all over again, Webull would be where I would start, and not just for trading, but also for learning the ropes properly. So I can't stress enough the value that is to be able to practice your trades, you know, real time with the market. You can journal it, assess your trades, grade your trades, all of that. Now, after all that, we have our platform. Now let's get to the options, okay? So first we need to actually get approved before we can start trading options. And this is something that I talk to with different people of how do you move to different levels. So getting approved for options trading, the one thing I'm gonna say is when you do fill out the application, you're gonna give them the details about your financial situation, your trading experience, and your goals. As far as moving up levels, I'm not wanting to tell anybody to lie. The only thing is to move up in levels, you need to be able to, you would want to show that you are understanding and willing to take on the higher risk with those strategies. In this portion of the video, we're going to be talking about your actual trading game plan. So how do you actually find the golden opportunities and keep your wallet from bleeding out when the market is playing games? Let's simplify it. What options do you trade? So when it comes to, you know, selecting stocks that you want to trade options on, it's really important to focus on liquidity. Okay, so a stock is going to be considered liquid when it's easy to trade. And that means that you can casually, you know, buy or sell shares quickly because the trading volume is so high. So there's always shares available and always shares being picked up. Okay, so this is going to be really important because it shows that there's almost always somebody that's willing to take the opposite side of your trade. That's going to be necessary. All right, there's nothing worse than getting stuck in a trade that you cannot get out of. And that's on both sides, whether you're trying to take profits or you're trying to cut your losses, you can't get out unless it's at the worst possible price. Okay, so a good rule of thumb is to look for stocks that have an average daily trading volume of at least 1 to 2 million shares. Okay, and so usually in your trading platform, it's going to let you know that when it shows you the stock price. Okay, so usually around that area, they're going to have what the average trading volume is. So usually it's going to be over a 3-month period, and then it's going to show you what that volume was for that day. So that also allows you to gauge, okay, how's the trading volume today versus a 3-month average? Is it more or less? That's also going to give you a key into how much the price is likely to move that day. All right, so this level of activity usually means that the stock has enough movement to make options trading worth it, because when we're trading options, you know, we need that stock to move. Our option contract is not going to gain or lose value. Actually, it is going to continue to lose value as long as we have it open, but we need for that stock to do some moving. So this is going to help us with that. Now, before I get into my favorite trading strategy, this is going to be picking the right option. Okay, now picking the right options, it isn't just about having the hottest stock pick. Okay, it's really more so about your strategy too. If your trade doesn't match the game plan, then you may as well just continue throwing those darts blindfolded. You remember, I think we mentioned scanners and screeners earlier. Using scanners and screeners, this is going to be your best friend for finding good trades. Okay, so instead of just scrolling through a list of God knows what, these tools are going to narrow it down so that you're only looking at the stocks that tick all of the boxes for your strategy. Different things like the stock price, the stock volume, chart patterns, signals, crossovers, and even for options, you can find options based on different things like the premium, the days to the expiration date, delta, theta, and so much more, even implied volatility. Okay, so I have a playlist of videos that kind of walk you through how to use the scanners in different platforms like Thinkorswim and Webull, because those are the two that I have used for the most part. Now I know there's more out there, but these are my go-to. When we're trading, I want to start with simple strategy. So right now we're probably going to be on a level 1 or 2. And so we're just going to be buying long calls and puts. when you're choosing your option contract, look for options that have high volume, high open interest, higher delta, and lower theta. All of this to align your trades with the market liquidity and also how you anticipate the movement, whether it's bullish or bearish. This is one of the most profitable trading strategies that I have used. And if you've seen any of my videos, I talk about this so many times, okay? And it's called the triple screen trading method. And so basically, whenever you're looking at a stock, then you have to look at it on 3 different time frames. All right, so you want to start with one time frame to see the overall trend of the stock. Then you're going to switch to another time frame and you're going to use that to see oversold or overbought areas. And then also you're going to use that time frame to figure out places to put your stop loss zones. And then on the third time frame, that's where you're going to actually find those perfect entry points, okay? So let's just say, for example, you're looking at a stock and the trend has been bullish on the longer time frame. Then you also see that the stock hit an oversold zone on the middle time frame. So using, something like your RSI indicator, that's your green light for a potential for a bullish entry. Then you're just going to move in a little bit closer and wait for, crossover on that closest time frame, and that's your entry point. Now for a bearish trend, it's just going to be the opposite. You would see a bearish trend on the long-term chart. Then on that middle chart, you look for the RSI to be overbought. That's going to be a good entry zone. Then we have our closer time frame for that exact entry point. And so as far as the indicators that you're going to use for the strategy, I pretty much stick with the classics. I'll use moving averages, exponential moving averages, the RSI indicator, average true range, the MACD indicator. I also use the super trend indicator. And of course, you can't forget about just the traditional trading volume. And also another huge thumbs up to Webull. This is why I use the platform. This is only going to be on the desktop version, not on the mobile version, to my knowledge. You can set up the 3 different screens on Webull for free. And so I can actually show you here. So I'm just bringing up Webull now. All right, so now here you see I'm on Webull and I have the one screen. Okay, this is Micron technology. Oh, and also here, this is what I wanted to show as well when we were talking about the volume. So you see right here, just even for this stock, I'm filming this on a Saturday. So that means that on Friday, the volume was 49.5 million. And then we saw the average volume over a 3-month period is usually 23 million for the day. So the volume was crazy. Let's look on the hour chart and see what the movement was like. Okay, it was up $3. So that was pretty good. The volume, I made some good profits off of this. Micron actually popped up. There was a trade that popped up in my trading group. And also I want to leave a plug. If you are new to options, just try out, I have it in the link below, but check out my options trading group. This is a group where I'll have trading ideas posted throughout the day, and it's posted by bots, not by me. I will post watch lists of the trades that I'm doing, but this is awesome because it posted a huge trade for Micron. And I think I opened a credit spread. So I opened one of those spread positions that we talked about from level 3. I think I had it open for maybe a day or two, closed it the next day at almost 90 or 80% profit. So it was insane. But yeah, make sure you scroll down below and check out my options trading group. But anyways, on Webull, to get to the 3 screens like I was talking about, you're gonna go right here where it says grid. Click on that and you'll see this pull out. So you have 1 chart, 2 charts, 3 charts. I think you can have a max of, what is this? 9? That's a lot. But what I'm gonna do, I like the 3 charts, and then you can kind of have it sectioned the way that you want to have it. But this is perfect for me, this right here, because boom, we have it set right here. We have our large time frame, and you're gonna have to kind of configure it a little bit. Right here with the sync, you want the symbol to be the same, not the indicators and not the time. So here, for example, I'll have it daily. Right here, I may have it on the 4-hour chart, and here I'll have it on the 1 hour. These are pretty much the indicators I'm going to use here. Moving averages, MACD, volume. Here, I'll either have my average true range. That's what I use to set the stop losses. Yeah, I just have my little RSI right there to look for those overbought, oversold zones, because you can see how sensitive this is to this buying and selling. Beautiful. Love it. Okay, for this chart, we're going to just have our moving averages. And then I didn't tell you about the super trend. Here's a super trend right here. And basically, you can just see here a price crossing above there. We probably would be moving into a bullish trend. Honestly, I would probably say it crossed above 105. 105, but they have it all the way down here at 97, but that's fine. It is above a support area, and I love that Webull has these tools. So I'm off on that tangent, but yeah, just make sure you check that out with the triple screens. Bringing everything together. If you stuck with me through this entire video, congratulations. So you are gearing up to drive into the options trading scene with a solid foundation. Start simple with those strategies that I mentioned earlier, like long calls and puts with the triple screen trading strategy, especially on stocks that you know and love. Everybody knows about the Teslas, Microsoft, Apple, SPY, and things like that. So those are always going to be pretty volatile. So use these tools, refine your morning strategy, and never stop learning. With a little bit of practice and a lot of patience, you're going to be finding these amazing golden trades more than you could imagine. If you like this video, make sure you click that thumbs up button for me. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. All right, and I'll catch you on the next one.